Very low vacancy rates have been the reality for most parts of Australia for years now. And as a consequence, we've seen major rent rises, causing financial hardship for more and more tenants, if they can find somewhere to rent at all. Now, until recently, media has reported the fact that there is a shortage of rental properties and that rents are rising fast, but there's been no analysis about why we're in this difficult situation. But now at last, media is starting to write about the circumstances that have led us to a national rental shortage crisis, specifically the series of political actions which have deterred investors from buying properties and making them available for rent, or prompting investors to sell up and exit the property investment market altogether. The Australian newspaper reported recently that thousands of mum and dad landlords are selling off their rental properties. And keeping in mind that over 90% of rental properties are provided by private investors, most of whom are ordinary households on average incomes who own just one property. The Australian newspaper wrote that this was a response to state government's strengthening of renter protections and increasing interest rates, with the threat of more changes on the horizon. The newspaper noted that new data from PropTrack had revealed a spike in the number of investors cashing out of the market, with sales of investors remaining notably higher than pre-COVID levels for the past 2 years. And it comes as Prime Minister Anthony Albanese has secured the support of state and territory leaders for changes to strengthen renters' rights on a national level. The nation's housing ministers will present policy options to help renters by the end of the year, with the group set to examine programs regulating landlord decisions on the size and frequency of rent increases. But these are the types of political decisions which have been common in recent years, scaring investors away from the residential property market and leading to a steadily diminishing supply of rental properties. The Australian reported that leading investors and real estate experts have warned the Prime Minister that governments have demonised and discouraged landlords who provide the market with millions of homes, and that further change threatens to shake confidence in the wider property market. Fewer landlords have been buying properties since 2017, when numbers peaked, which has caused the rental pool nationally to shrink. And the Australian wrote, with fewer homes and heightened local and migrant demand, asking rents in Australia's capital cities have surged on average by $80 a week in the past 12 months to set at a weekly rate of $520 a week, as vacancy rates hover around 1%, when 3% is considered our healthy level of vacancies. Now, PropTrack's Director of Economic Research, Cameron Kusher, said that it had become much harder for investors to park their money in the property market. He said investors are charged higher interest rates, their borrowing capacities have reduced quite dramatically because interest rates have risen so fast, so quickly, and it is generally less attractive for investors to be in the market. Now, undoubtedly, landlords have become the main target of government policies aimed at providing relief to tenants facing rapidly rising rents and intense competition for properties. And the founder of Propertyology buyers agency, Simon Presley, said investors were sick of being demonised by governments and were choosing to put their money elsewhere. Presley said, investing in real estate is an enormous financial outlay, so you're not going to take on this big financial decision unless you've got confidence. And he said, we've had 8 years with a lot of regulatory change, all of which has been targeted at causing harm to the investor. Now, the Real Estate Institute of Australia President Hayden Groves agreed that a strategically aligned approach to tenancy laws between jurisdictions is productive, but he urged an examination of support rather than targeting landlords. And he said there's been successive housing policies that are all looking to disincentivise this very, very important cohort of the investor pool that continues to supply Australians with most of the homes that are rented. Now, an example of the disincentives and the demonising of investors comes from the Greens, who have a series of policies which would turn the rental shortage crisis, I think, into a national catastrophe. They include removing negative gearing, increasing the capital gains tax, and implementing 2-year rental caps. And they've threatened to withhold support for the federal government's $10 billion housing bill, which would eventually provide desperately needed new supply to the market. Over the recent years, all state governments have introduced rental reforms, all of them overwhelmingly in favour of tenants and detrimental to the property owner. And Simon Presley says, "We don't go out and punish the farmers because the cost of their produce goes up because of shortages. The cost of rent has gone up because we don't have enough supply of rental accommodation." Now, economist Saul Eslake says reforms being implemented by state and federal Labor governments are preventing investment in the housing market, and that will make the crisis worse. Eslake, who's the former ANZ chief economist, said these measures are a band-aid solution which covers up a fundamental problem in the housing market, which is the mismatch between demand and supply. And Eslake says, depending on how serious and restrictive any proposed regulations turn out to be, there will be more disincentive in the market. The economic advisor for Judo Bank, Warren Hogan, has warned against governments artificially capping rental increases, arguing that they would fundamentally change the investment market and jeopardise future supply of housing in this country. He said reducing the frequency of rent increases may help renters in the short term, but he warns that artificial rent caps will scare off investment with the very real risk that investors will not be able to make an economic return to cover their capital investment, and that will simply make the problem worse. Hogan says, "We now have to get to the heart of the problem, which is demand and supply, rather than trying to do a patchwork of policy solutions with a whole bunch of unintended consequences which undermine the medium to long-term performance of the economy." The Centre for Independent Studies chief economist Peter Tulip says increased rental protections will worsen the shortfall in the housing market, with mum and dad investors more hesitant to invest and rising interest rates and a changing regulatory environment discouraging them further. And Tulip says the rental market is incredibly tight, and the signs are that it's going to get much tighter, partly because we have very little supply and we're having this big increase in demand because of overseas migration. Now, in recent months, all kinds of band-aid solutions to the rental problem have been suggested by a wide range of misinformed people, preventing owners from using short-term rentals like Airbnb, building 1 million new homes over 5 years, increasing social housing, bringing in rental caps and other measures. But none of them speak to the real issues. And until governments implement policies to encourage and incentivise the people who are the only viable solution, and that's property investors, then we will continue to have a worsening rental shortage crisis. And if the Greens have their way, we will have a catastrophe that will put thousands more people on the streets with nowhere to live.